Hey guys, welcome back to the channel. Today we will be talking about Genting Berhad, and maybe it's making a comeback. Alright guys, as a disclaimer, none of what we say is financial advice. Please speak to a professional if you need that sort of advice. What we say is purely educational, and we do not hold any shares in Genting Berhad. Hey guys, before we begin, just to let you know, we have a totally free masterclass just for you to sign up for in the comment section or the description, where we will guide you on how you can build a 6 to 7 figure portfolio using the power of stock investing. Go check it out. So Jonathan, let's look at the share price of Genting.
Yep.
It is
okay. So
62% down for a good 11 years.
Yes. So for the past, actually it's 12 years. 12 years. It's actually still down 8%.
Yeah.
yeah. So that is, it's going back to 2008, I believe. 2008 market cap.
2012 is 14 years already.
Yes. So if it's 2012, they're actually down from the peak lah. From the peak around, I believe it's 11 ringgit per share. It's down like 60%. Yeah. So that is actually pretty bad. But if you notice that their quarterly results, right, they're actually making a turnover. They're making a profit right now.
Yeah.
About 128 million as compared to previously. I see there's a lot of red blood losses in terms of their quarterly results. And if you look at as a whole, in their annual result, they're still actually making losses, although it is starting to shrink. Yeah. Yes. And that's why I think a lot of retail investors are starting to ask whether is this a comeback for Genting Berhad.
Yes, that's true.
Yeah. So let's find out further. Okay, so this is actually a rough research I did. I didn't really do a very super in-depth one, but essentially this is their investor presentation slide. And some interesting facts that I found, right, is that, so number one, obviously the visitors is reducing, of course, because they were actually still undergoing lockdown. I believe in September 2021 also, there's still a minor lockdown.
Okay.
Yeah. So that actually resulted not many people to travel and go to Genting. But the interesting thing is that there is a lot of day trippers. So previously,
I was
there's
one of them.
Yeah.
Earlier this year, not in 2021.
Okay.
I was one
Fair enough. But how was it though? Is there any changes? Did they like?
Huge changes because they really revamped a lot of things.
Yes.
There's a place. There's nice hot pot places there. It's a nice drinking place there. It's like a bar, a little mini bar town right now.
Yep.
And yeah, I think they have improved it. Yeah.
Right. Okay. So the reason why I say this is interesting is because now there are more like one day goers only instead of them actually staying inside the hotel. So if you can see the numbers between the rooms night sold and the day trippers, right? Yeah, you can see there's a distinct difference. One is dropping a lot, or the other one is increasing. And if you look at each of these resorts income statement, right, their revenue and earnings, you can notice that Malaysia one is still dropping because the reason they gave was the lockdown. Yeah, and everything is still going quite slow lah during that time. Whereas for the US and the Singapore side, they're actually pretty done well. The reason is also because they are reopening of the economy is much faster than Malaysia.
Yeah, correct.
Put it that way. So yep, this is actually a very quick key stats. And if you don't know already, they have a few they generate money from these few locations. So about 28% comes from Malaysia. 24% comes from Singapore, and the US side is also 22%. So this is all I believe is the revenue from the resort segment. Yeah. And
of course in Malaysia it's not very good, the EBITDA, because of, you say the day trippers, right?
Yes, the day trippers, and also because they are not really opening up as fast as other countries.
Right.
Yeah. So yep. That's about it. And if you look at revenue by segment, obviously about 64% of the revenue comes from the leisure and hospitality. And then the remaining 22.3% comes from plantation, and then 11% is energy. So it's somewhat like a conglomerate.
It is a conglomerate.
Yeah, it is a conglomerate.
Not one business is going to affect the entire group very materially. But of course, I think with COVID, you can see they did suffer.
Yes, correct. And obviously, their resorts are actually contributing the most revenue. They also contribute the most in terms of EBITDA, earnings before interest, depreciation, and amortization. So yeah, I mean, this is actually a pretty straightforward data. And I think some of the reason that investors love Genting is because of their dividends.
Loved. Right?
Loved.
Right.
Yes.
Dropped.
Yeah. So if you look at the dividend, it's actually been going down. Yeah, I believe there's a latest data that they actually distributed 7 cents in dividend, which also is still going down.
Yeah.
I mean, whether would they come back and increase dividend, that will be another question. Actually, that depends whether how much you believe on the entertainment industry. What is the growth going forward? So I have never been to Genting for a very long time.
Yeah.
I believe the last time I went there, I think it was like 10 years ago.
It's very different now.
Yes.
Very different now.
Yeah.
Sometimes it gets me to think, right? Like, why is it that they're paying all these special dividends or that? I mean, who knows? But it could be related to the big pay that they have. So maybe if they pay out to shareholders a lot more money, they'll be a lot happier, quote unquote. But of course, they are also shareholders, so they will also be receiving a lot of dividends.
Yep, it could be too.
Alright guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description.
Okay, this is just their capital commitments. So I think there is nothing much to talk. So there's a huge chunk of money actually going to Genting Singapore. That is because they're actually doing this Resort World, the 2.0 project. They're actually kind of expanding the stuff in Singapore. But that actually kind of trickled down because some of the work already is done. And also Resort World Las Vegas, I believe if you pay attention to their news like last year, late 2021, they actually opened a new Resort World Genting in US. Sorry, Las Vegas.
Yes, US,
Yeah, and that actually have like a huge crowd.
Yep.
And I believe back then also the stock also went up a little bit because of this news also. Yeah, because people think like, oh, there's
so
a lot
why
of
has
people.
it dumped so much, the revenue?
The which revenue? Oh, the revenue
from 4.5 to 200.
Oh no, this is the capital commitment.
Sorry. Yeah, capital commitment.
Yeah. So it dumped. It actually dropped 94%. Is because almost all of the stuff over there is done constructing already. So there is little funds needed to actually construct.
Fair enough.
Okay, so because of all of this capital expansion, right? They building all those Resort World. Obviously, they need money to raise fund, right, to construct all of this. So I was surprised when I actually look at their net debt position in 2012 because I thought they were going to be net debt. I assumed that they were consistently expanding their business, but I was wrong. So they were in a net cash position a few years ago, like 11 years ago. But now recently they are in a net debt because they are expanding.
I mean, as you can imagine, right? Like if you think of it from the perspective of the leaders at Genting, if you want to expand your business, where can you expand? Well, it's either palm oil or a plantation or
property
or like, casinos and all that, right? So property, we know it's a difficult place to grow. Plantation also is very cyclical and it's definitely not easy business. It's a commoditized business. So the best one to expand into among the 3 existing ones is definitely casino, right? We know casino is a sure make money business, right?
Yes. Yeah.
But the challenge is with casinos, you always need to be working tightly with regulators to get the licenses and things like that. And so it takes time. Right? That's probably why. They probably planned on expanding 10 years ago already. But they need to work out the time. They need to do the market research, get a license, get to, all these things. Then only they can start building.
Yep, that is fair enough.
It's not like, I don't know, how do I put it? It's not as easy as maybe even a factory, because a factory you can theoretically build it within a year or 2.
Correct.
Then let's say if you got like one of the Penang guys, they can just start selling more of the same stuff, right? Whereas Genting is not very similar. They have to consider a lot of like beyond just financial considerations, they also have to care about social considerations as well.
That is true. Very, very true. Okay. So cash flow also, previously they were actually pretty cash flow generative. But then recently it's not. Of course, it's because of COVID lockdown and everything. Less money coming into the business. That's why less cash flow. Okay, and this is an interesting thing that I actually found from their investor presentation. So this is actually a question and answer from their AGM. So this individual asked that why is the CEO being paid so much, so highly? I mean, as you can see, high salary, and then is their salary justified? So he actually made comparison with Apple and also with Maybank. So if we look at how much is Genting paying themselves, right? So their salary, a CEO is actually getting paid a 70 million a year salary for a 20 billion market cap company. Whereas for Apple, they are a $3 trillion company, but they are only paid 3 million. So it's actually very minuscule if you convert it into like a percentage.
Yes.
Yeah. And if you look at Maybank, also is similar. They're only getting paid 10 million, but they are managing a 100 billion company. So the CEO basically answered like,
To be fair, I'm not sure about Apple whether the 3 million is inclusive or excluding.
The share and the salary is it? Yeah.
So it's excluding, right?
This I didn't fact check.
Right, okay, sure.
But then you get the gist of it.
Right.
You get
the question,
the question in general.
Yeah, so his response is very interesting, right? 70 million in 2021.
Yes, and he said, and he said that they didn't really get any bonuses because of during the lockdown and everything. So it's actually just his salary lah. Let's put it that way.
Yeah, there was a part of the group's cost rationalization exercise 2021 included a freeze or remuneration.
Yep, and salary reduction.
Okay, I guess that is the right thing to do.
Yep, it is.
But then we will still have to figure out like, okay, when we look at the 4 entities, is that like you can break it down into 4 different businesses, yes. But then those 4 different businesses is still not bigger than Maybank, is still not bigger than Apple, obviously. So I mean, I would definitely have to ask, not so much on the reduction and freezing. I think that's a great thing, but why is that number so big?
Yes.
And when you consider the fact that the equity that the CEO or chairman holds in Genting Group is bigger than, let's say, what the Maybank CEO owns of, I would presume, own of Maybank, or bigger than what the Tim Cook is owning of Apple as a percentage.
Yep.
Right. So I think this is something that I would push back on a little bit, just because I genuinely want to know how they arrive at that 70%. Do they really feel that because there's these 4 different units that now the role becomes more complex or much more difficult than, let's say, an Apple or Maybank? But definitely, I want to emphasize that it was the right thing to do to
reduce, chop a bit,
chop the salaries lah.
Yeah, but I wonder if they didn't chop, what will his salary be? So that's another.
So and then also right at the end they say, right, that the basic salaries are flat since 2019, which is also good. But when it's at such a high base already,
I think this is something that you as investor may want to know, and just ponder upon this question lah. Why are they getting paid so high?
Yes.
Okay, so this is some of the takeaways that we derive after researching about Genting. So number 1 is that the entertainment business, I didn't really research very deeply on what is the growth moving forward, but I did glimpse a little bit where they say that those gaming and casino industry is going to grow like around 3 to 4% for the next 5
It will never
5
die, right?
It will never die.
It's gambling. Gambling will never die.
But it's just a slowdown only lah. Very slow. I'll say it's like a cash cow kind of industry. A maturity.
Everything is cash.
Everything is cash. Yes.
Well, with some assets like hotels and slot machines.
Correct. And another thing is that they also have competitor OWG and Naga Corp. But if you look at both of these companies, right, they are not really doing that well in terms of financially.
Right.
I think that is also kind of the same for Genting, but although Genting is improving a little bit right now, so you want to pay attention to how are their competitors doing. If they are actually performing better than Genting, then you may want to find out why. Are they doing better than Genting? Yeah. And the third point is the conglomerate discount.
Yeah.
So I think we talked a lot about this. I mean, because you're not really a specialized business, the growth of the business is actually kind of put on a pause. It's going to be very flat.
Yeah.
Because why you actually going to conglomerate is because you cannot really squeeze out much profit from that one business. So you need to go for another business to find more profits. Yeah. So that's why when you go even more diversify, the valuation of the particular company also, I believe, will be much lower as it was before. And the last point we have here is, if you plan to invest in Genting, right, you may want to know what is your purpose of buying this company. Is it for capital or is it for dividend gains? I think this is just a very short question that you may want to ask before even buying.
Yeah, just to add to the conglomerate discount part is it's more like the market psychology as well. People generally like clear business models where, Apple, right, iPhone, iPads, that's it.
Yep.
People love that kind of stuff. So when you have palm oil, when you have property, when you have casinos, right, it confuses a lot of analysts when it shouldn't, but confuses them. So that's why they don't tell their bosses, which is the big fund managers, to buy the companies. And so what happens is that the valuations will drop.
It's hard to value, I'll put it that way. There's a lot of valuation comes into play.
Yeah, that's true.
Yeah, it's hard to derive a number, a whole figure to actually analyze that company. So, and just a minor plug-in over here, FIRL Pro, you know already about this report that we have been talking a lot in our past videos. So, I won't really talk much about this, but we do have a free sample if you don't know already for FIRL Pro. So, you can check, the links are all in the description and comments to check out what is the sample that we give. We gave actually one of the videos in our SIB program, one of the stock reports that we publicly shared, which is PNB tag.
It's up like 40% as of this recording.
Yes, correct. And the last one is the big picture report, is basically how we analyze economy and what is their direction going forward.
Yeah, and guys, look, if you want more details about this, feel free to email us at hello@firl.co.co. And also, if you want to hop on a Zoom call with us so that we can explain a little bit more about the program, we would be happy to do that as well. And guys, hope you enjoyed the video. As usual, follow us on our other social media pages, like, comment, subscribe, the usual stuff. And we will see you in the next video.